Tuesday, the 2nd of April. Welcome to the new month and the start of the new quarter, everyone. This is your Frontier opening bell. It's been a very long Easter holiday weekend. So markets are back on the block this week to start everyone on the roll for the new week. It's took down to 4 days, but let's just get on to take a very quick look back where we finished off. Just to remind you where we finished off on Thursday before the long holiday weekend. Nigerian stock market did 27 basis points in the green, had two sessions late last week just to rebound after the central bank interest rate decision and the announcement which came also later in the week around the new banking sector consolidation under the Cardoso's arrangement administration at the central bank. The BRVM in Cote d'Ivoire was better by 36. The Egyptian stock market started its own week Monday. The market was up very strong, 5.26%, starting the rest of the week before the rest of us. And that took the Egyptian market up strongly above 28,000 reading. That's EGX 30, by the way. The Nairobi market was down very sharply, 4% or thereabout on Thursday, while the Zimbabwe market was in the green, roughly 1% at 74,536 Thursday before the holiday. Let's see how the markets are reopening this week. Quite a whole lot to talk about. To my colleague in South Africa, in Johannesburg, will be chatting to us in just a few minutes on the show. But let me walk you through quickly some of the big headlines as we have it across the East African corridor with the OPEC GMMC. And that's a big story for everyone. Of course, we got news that Uganda and Kenya have resolved their face-off as far as using the Mombasa port to pipe in fuel into Uganda is concerned. Today, the OPEC GMMC Joint Ministerial Monitoring Committee will be holding this meeting. The outlook from international oil energy experts, the journalists and traders is that there will be no change in the existing policy of OPEC moving forward with a 2.2 million barrels cutback, supply output cutback being extended into the second quarter, which was stepping into. The Kenya stock market jumped 47% in the first quarter in US dollar terms. That's a very strong comeback for the NSE that was whacked seriously last year as investors flee the markets. Now we've got investors coming back strongly again with the news around BlackRock bringing in its 2.9, roughly $3 trillion assets under management to step into sub-Saharan Africa and using the Nairobi stock market as the gateway. Equity Group says it's ready to float to general and health insurance subsidiaries by the end of the year. That's expanding the product portfolio and the business of Equity Group, which of course includes the Equity Bank, which has a strong foothold across East and Central Africa, and now a strong foothold in DR Congo, taking a chunk of the banking and financial services business there. Let's move on to Air Tanzania, launching its initial flights to Dubai in the UAE. Congratulations, fly the flag of Air Tanzania. While Britain Kenya reporting 97.4% jump in net profit to about $3.2 billion for the full year 2023. You have been briefed. East Coast. Let's move on to the West Coast of the continent. Let's check in. What's the big story? Everyone's keeping an eye on Nigeria starting today, 1st of April. Banks in Nigeria have 30 days to submit to the central bank their plan to recapitalize. There's cash on the table. That's what the central bank wants. No use of retained earnings, nothing else, no retained profit, whatever. Just bring additional cash to the table as outlined in the new recapitalization program. 2 years for the banks have to get enough time. Over the weekend, we got an announcement from Access Bank saying it's going to do a rights offer of $1.3 billion to meet up the new recapitalization exercise. Access Bank will need roughly $250 billion or $280 billion thereof to meet up the new capital base as required by the financial regulator. The stock market in Lagos posted a very decent 39% in the first quarter with a very strong comeback that we saw. The Naira was also up little north of 20% in the month of March as well. The quarterly basis, the Naira still down against the dollar at around 1,255 when we finish on Thursday. The market is reopening today. The question is, how much firepower does the central bank still have to keep the Naira floating and punching against the US dollar? Now you've got boardroom struggle, horse trading, all that in play as Nigerian banks begin to recapitalize. News also coming through that FBN Holdings will do a rights issue. The parent company of Nigeria's oldest commercial bank, that's First Bank of Nigeria Limited. Airpeace, the iconic Nigerian commercial aviation company, says it's make its first debut to London routes as a new beginning for Nigeria, trying to shake off other international airlines, which dominated Nigeria's juicy and very sweet routes such as Heathrow and other airports around the world. Now, Air Peace has joined that league. That's a flying Nigerian flag right there to London. Congratulations. In the meantime, S&P says it's upgraded Cameroon's ratings from CCC, CCC plus, to B minus, while Liberia is inaugurating a new president with the economy in view. Nigerian President Bola Ahmed Tinubu will be attending the inauguration officially today, Monday, the 2nd. Also Tuesday, Tuesday, the 2nd of April. Yesterday was Monday to get. It wasn't to get the new month started. Let's get on to Southern Africa. I'm sure Tuletu is waiting, but let me just run you through some of the headlines I grabbed together for you over the weekend. With fuel prices expected to go up from tomorrow, the 3rd of April in South Africa. It's no good news because of the whole issue around Ukraine and Russia, the whole issue around Russia refineries being hit by Ukrainian drones. Then you've got the supply issues around OPEC, oil prices now jumping very strongly above $80 a barrel. Mozambique, still in Southern Africa, lowers rates of 15.75% from 16.5%. That was late last week, while Malawi is looking to start trading under the EFCFT umbrella in the month of October. Congratulations. Of course, we have Zambia, where audit has revealed about $35 million overpayment to petrol suppliers. That sounds familiar of stories elsewhere on the continent. But of course, let's look at South Africa. GSE suspending Oando Nigeria from its trading board because the company failed to meet its posting requirements, which requires timely reporting of its numbers to the trading platform. Those are your headlines on my side. Let me find out from my colleague and friend in South Africa, Tuletu Zwane, how the markets looked like last week and was on her calendar for the new week. Good Tuesday to you. Welcome to the show, Tuletu.
Thank you, Boson. Yes, I'll start with the week that was. Elections 2024 were back in focus in South Africa. As you know, former President Jacob Zuma started a party called Umkhonto weSizwe that will be also contesting the elections on May 29. The ANC was against this, but the electoral court allowed the electoral commission's decision to register the party. Jacob Zuma has a very strong hold in KwaZulu-Natal, and if you remember correctly, about 2 years ago there were riots when the former president was taken to prison. Also last week, South Africa's central bank kept its key rate steady at 8.25%. At this number, the country's policy rate remains at the highest level in 15 years, with the acceleration of food and fuel prices keeping it up there. The bank's Monetary Policy Committee unanimously agreed to leave rate at 8.25%. Meaning that rates will be kept higher for longer. The governor of the Reserve Bank, Lesetja Kganyago, himself said that because of high risks to the inflation outlook, it is possible that the Reserve Bank will be forced to keep this rate at 8.25. Economists now say that instead of the first rate cut starting in July, as earlier predicted, they're now saying that it is possible that the rate cut will only start in September and at only 25 basis points increments. Also in Southern Africa, the Banco de Mozambique cut its policy rate by 75 basis points to 15.75%. This follows a 75 basis point cut at its previous meeting in January. The MPC said uncertainties and risks associated with inflation projections were favorable, which is why they decided to continue on the rate cutting cycle. Also last week, Zimbabwe's inflation rate continued to climb in March 2024, hitting a one-year high of 55.3% from 47.6% in February. This was mainly because of the sharp depreciation of the country's local currency. In Botswana's GDP expanded by 1.9% year on year in the fourth quarter of 2023, following a 0.5% growth the previous year. I'll speak to the week ahead. Mauritius GDP numbers came out on Monday. The economy expanded by 7.3% from a year ago in quarter four, following an upwardly revised 5.3% rise in the 3 months prior to that. Key data coming out in South Africa this week includes ABSA's Purchasing Managers Index, which will give us more information about the state of the country's manufacturing activity. We know that manufacturing has been under immense pressure because of rolling power outages and also the issues at the state-owned Transnet that has been experiencing a lot of logistical challenges. What to look out for this week? Angola's reserves for March are coming out. Lesotho's interest rate decision will also be out this week. All eyes will also be on Mauritius Central Bank on Wednesday. The annual inflation rate in Mauritius rose for the second month to hit 6.2% in February, the highest in 8 months, up from 5.2% the previous month. The country's benchmark interest rate was last recorded at 4.5%. Interest rates in Mauritius averaged 4.18% from 2006 until 2024, reaching an all-time high of 9.25% in June of 2007 and a record low of 1.85% in April of 2020. Also on Thursday, country PMIs for Mozambique and Zambia will be published, and Mauritius inflation numbers and reserve data for March will be out on Friday.
All right, thank you so much, Tuletu, for that Southern Africa's briefing. Keep your eyes on those economic data, a raft we've got on our data for this week, the PMIs, the inflation, the GDP numbers, as Tuletu just mentioned. But let's check in with our friends in the markets in the North Africa, where the S&P has revised outlook for Morocco to on BB+. The rating is now positive from stable. And that's some good news Morocco can use. The IMF says he's topping Egypt's funding support funding of the EFF by additional $5 billion, while the cabinet in Cairo has approved $135.39 billion as the budget for 2024-2025. And Morocco's OCP group reporting full year 2023 revenue up roughly $10 billion for last year, despite economic challenges. That's that industrial listed company, the behemoth, on the Casablanca Stock Exchange. And finally, Tunisia and Netherlands say they are discussing jobs, vocational training, cooperation among the two countries to support President Said's administration. Those are your headlines. This Tuesday is the formally start of the new business week in the markets. Have a great day, everyone. Enjoy your day and the rest of the week, and I'll see you soon.